G'day guys, Seeney here from the Australian Wealth channel, and today we are talking about some of my favorite ETFs. So thank you guys so much for tuning into this channel and watching this video. Please make sure you like and subscribe, and I'll make sure I put up a cute cat photo for you. Here you go. Thanks so much. So let's talk about ETFs. Now, what is an ETF? Now, an ETF is an exchange traded fund. And basically what that is a basket of shares. Different funds, what they'll do is they'll create a portfolio of stocks. They might be 20 stocks, might be 50 stocks, it might be 500 stocks. You know, they're all different. And what they will do is they will allow you to invest in that particular fund. So as the value of those companies, whether it be 20 or 200 or 500, rises over time, that means that you're going to see an increase in the value of your investment. Something that's really great about ETFs is that depending on the fund, there can be certain criteria that a stock needs to meet to actually be included into the ETF. So to get into an ETF, a certain company might need to have a specific market capitalization or bigger. So this means that you're not exposing yourself to really dangerous downside risks with small companies. And there's a lot of different things like that with certain funds when it comes to their ETFs. There's a criteria that the stock has to meet. And obviously, if these funds are investing in these companies, they believe, especially in specific cases where they're looking in industry, they must believe that they're going to do well with their research. So some ETFs are widely diversified. They might have 500 companies in them, 200 companies, and some might only have 20 to 50. So some are really widely diversified, some can be quite sector specific. So that's something that you need to keep in mind when you're choosing your ETF. Do you want to be exposed to less risk or more risk? Now, obviously, if you're exposing yourself to less risk, then there's chances that you're not going to make as much money in the long term. But if you're going higher risk, you might make some more money, but you might also see a decline in the value of your investment. So that is something that you need to weigh up when you're doing your different research on ETFs. So without further ado, we're going to talk about 8 of my absolute favorite ETFs, which I think are really great ones for investors. So the first one is VOO, which is a Vanguard index of the S&P 500. Now the S&P 500 are the 500 largest companies in the world. So by investing in this index fund from Vanguard, you're getting exposure to some of the largest companies in the world that we use every day. Companies such as Amazon, Apple, Tesla, Microsoft, Alphabet, which is Google's parent company, Facebook, Adobe, Visa. There is just so many to mention. So basically, if you think that America is going to continue to do well over time and those companies are going to become more profitable and even more prosperous, then this is an ETF that you would invest in. It's very diversified amongst basically every single sector in the US economy. Now, if you want to take that to the next level and look at companies that aren't just the top 500 and you want to go the entire stock market in the US, then the Vanguard VTI index is going to be the one for you. So this is an ETF that tracks the total stock market in the US. So you're getting every single company that's basically listed on the exchanges over there, whether that be the NASDAQ or whether that be the New York Stock Exchange. Now we're going to bring it back to Australia. So we've just talked about 2 ETFs that are for the US market. Now there's a great ETF from a company, a fund called BetaShares, and they have created an ETF called the A200. And the A200 tracks the top 200 companies in Australia. So if you're looking to invest in Australia and invest across all sectors to just get some exposure to the Australian market, then the A200 would be a good bet. So this would give you shares in companies such as CommBank, ANZ, Westpac, Fortescue Mines, BHP, Afterpay, Wesfarmers, Qantas, Telstra, and so many more. There's 200 in there. And of course, as I said, it's across a number of different sectors. So let's say that the travel industry goes to hell, because we've never seen that happen before in the last year or two. then you still have exposure to all these other sectors like mining, which have done incredibly well in the last couple of years. So it balances out your risk. So far we've talked about some of the large ETFs that track the index funds, but of course you can get specific ETFs too, targeting particular sectors. So for example, if you think that battery technology and everything to do with electric vehicles is going to go really well in the future, then there's also ETFs which target that particular sector. So obviously these can be a little bit more risky because you're targeting a particular sector, but of course the potential for return also increases with the less diversification that you have. So one of the most popular ETFs that has done incredibly well in the last year is called ACDC. And no, it is not the band. Don't stop me! That is the ticker symbol of this particular ETF. So ACDC is a battery tech and lithium ETF, which is equally weighted, which means that every single stock that is in the basket of shares has an equal weight. You know, it's not like the S&P 500 where Apple, for example, being a very large company, holds a lot more weight. No, this one is equally weighted. So not only are you getting companies that are looking at creating electric vehicles, but you're also getting companies that are looking at mining those particular minerals. So for example, in this particular ETF, we have Pilbara Minerals, which is a mining company. And on top of that, we have Galaxy Resources, which is another lithium miner here in Australia. But of course, you also have exposure to Samsung and Tesla and Panasonic. So all of those companies that are creating lithium batteries. So if you think this is a particular sector that's going to do really well in the future, then this is the one to invest into. Something else that's great about ETFs is that you can target a particular sector in a particular part of the world, and that is the case for the next one that I am going to talk about. Now that is ticker symbol Asia. So this is the ETF for Asian technology. So what this encompasses is the top 50 largest tech companies in Asia. And of course, that's been a massively growing market over the last few years. And that's going to give you exposure to companies such as Tencent, Samsung, Taiwan Semiconductor, and also Alibaba. So these are obviously giant companies. So if you're thinking that tech is going to do really well over in Asia, which, you know, it probably will, but of course you need to make up your own mind on that one, then this is an ETF that could be a valuable one to look at. So those four that I've mentioned are the four largest holdings and make up 10% each of the portfolio approximately. So 40% of the ETF is in those particular companies, and then there's everything else. Something there's a lot of talk about here in Australia is how difficult it is to get into the property market. And of course, we've seen some incredible gains in the property market over the last few years. Well, over the last 30 years, really, like it's just been crazy. But even if you don't have enough money for a deposit to actually buy a particular property, there is a way to get into the property market through stocks. Now, there's an ETF called VAP, which is the Australian Property Securities Index. So you can search this one up on Australian brokerages such as CMC. And what this does is it's an ETF that includes retail, office, and industrial property. So this ETF invests in companies that directly move as a consequence of the Australian property market. So we're looking at companies that own shopping centres such as Centre and Stockland. But on top of that, there's also exposure to developers, companies like Mirvac and many more. It's quite a large index with a lot of exposure to the Australian property market. So if you think that Australian property is going to do well over the next while, however long you're looking to invest, then this is one where you can actually get into the property market without having to own a property yourself. You're owning a basket of shares in companies that are going to do really well if the property market does well. Right now, I have two more ETFs to go, and these two ETFs are in a sector that I personally believe is going to see some incredible growth over the next 10 to 20 years. Now, as the world becomes more and more digitized, the world is becoming so reliant on computers, which means that cybersecurity is a sector that is becoming increasingly important, as if it wasn't already. Like, we've recently seen hacks on a pipeline over in the US. So it's really important for companies to make sure that their data is secure. So this particular area, I think, is going to see some great growth. So there's a couple of ETFs in this area that might be worth having a look into. So the first one is called BUG. Yes, that's right, BUG, which is a global X ETF. Now, this particular ETF includes a lot of cybersecurity companies and companies that have a lot to do with that space. So for example, in this particular ETF, there's CrowdStrike, Zscaler, Fortinet, Verona Systems, which is a company that I used to be invested in, which I sold out of a couple of years ago, but it contains so many different shares related to cybersecurity. Now, the second one that I wanted to talk about has the ticker symbol HACK. Yes, HACK, which is from BetaShares, and it's a global cybersecurity ETF. Now, this includes large companies such as Cisco, Cloudflare, also BlackBerry, Norton, and Palo Alto Networks, along with a number of other different holdings. Now, these two ETFs will give you massive exposure to the cybersecurity sector. So, of course, there's many other ETFs as well. You know, you can look at AI, you can look at robotics. There's so many different areas that you can invest your money. So if you see an area that you personally believe is going to do well over the next 20 years, then you can basically guarantee that there's going to be an ETF for that. So I'd be really keen to hear what you guys thought about these particular ETFs I've talked about today. Are any of them ETFs that you're invested in or you're thinking about investing? I'd love to hear your comments in the comments section. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. So thanks so much for watching, and we'll see you later.